5 excuses for not investing. Why they're wrong and how to overcome them. Every day, hundreds and thousands of new investors enter the market, hoping to become the next Warren Buffett. However, there are still many people who stay away from investing and the stock market. In today's video, I'll tell you about the 5 most common excuses I've heard from people about why they haven't started investing yet. Maybe that person is you. If you want to find out what these excuses are and also learn how to start investing, then stay with us because I think you might appreciate this video. After all, investing is one of the most rewarding career choices out there. It's also one of the best ways to grow your wealth or achieve financial freedom. So don't let silly excuses hold you back. Here are the 5 most common fears and excuses I keep hearing from people about why they haven't started investing yet. Excuse number 1 that I hear and that holds most people back from investing is that they say they don't know where to start. Investing can seem overwhelming and admittedly a little scary if you're an outsider. I can relate because I wasn't always an investor. I was actually a bit skeptical myself. I'm sure you've all heard stories of people who lost everything gambling in the stock market, which is indeed quite scary and can happen. That's why, if you're just starting out with investing, especially in the stock market, make sure you do a lot of research first. There was a time in my life when I'd look at my dad and friends investing and wonder how they did it. Then one day, I took the first step to becoming an investor, and the rest just came very naturally and easily. If you're just starting out, I advise following these 3 steps before investing. First, if you have debts, get rid of any high-interest debt you may have. And if you owe money, especially on your high-interest credit cards, the best thing you can do for yourself is getting rid of that. Paying interest every month can be very debilitating and it's best to steer clear. The second thing to do is open an online brokerage account. It doesn't take a lot of money to open trading accounts these days. I actually think it's completely free and you just have to maintain an initial deposit or minimum investment. The third step in the plan is to create a watch list of great companies. Start with companies whose business model you know well. If you're tech-savvy, start with the tech sector and identify the best investments there. Warren Buffett describes this as finding your circle of competence. They can be companies whose products you use, an industry you work in or are otherwise very familiar with. These should be solid companies with over 10 years of good performance. Warren Buffett also looks especially at how competent the management is and how honest they are in their reporting. He says if you want to judge how any company will perform over the next 10 years, the only thing you need to make sure of is that the company operates in a growing industry and that management is competent enough to make the critical decisions. After identifying good companies, add them to your watch list and then wait for them to go on sale during a stock market crash, or when the stock is undervalued. That's when you should buy them. The second most common excuse I hear people make is that they say they'll lose all their money. Well, if you know how the game works, you won't say that. Warren Buffett made his fortune in the stock market and he has 2 rules for investing. Rule number 1 is to make sure you don't lose money. He says never buy a stock if it's already grossly overvalued in the market. Always make sure you have a decent margin of safety, so you can actually protect your invested capital. The margin of safety works on the principle that you've purchased a certain stock at such a low price that the odds of it going up in value are now higher than the odds of it falling further. Warren Buffett's second rule is, don't forget rule number 1. He's made his fortune using this system where he makes a watch list for himself and then waits for the stock prices of these stocks to come down significantly. If you buy companies that are on sale, it's highly likely they'll be worth more in a couple of years. Prices in the market will go up and down, but you should be savvy enough to hold onto your stocks through these price swings. Ultimately, the long-term direction of most companies is up and so you won't lose money unless you sell the stocks at a lower price than you paid for them. It's almost certain you'll make money if you buy great companies at discounted prices and hold them for 10 years. Investing is that simple. If you're invested in a good company, all you have to do is wait. Charlie Munger said we don't make money when we buy the company and we don't make money when we sell the company. We make money when we wait. So don't get spooked if the market isn't doing well and the stock price of your company has just gone down. This is where people take their losses simply because they can't wait for prices to go back up. The third most common excuse I hear is that the stock market is about to crash. Well, even though there have been a couple of stock market crashes over the years, the market always recovers and bounces back. The stock market is one of the biggest investment opportunities you'll ever have. Wealthy investors like Warren Buffett and most investors actually wait for the stock market to crash. They see it as a great opportunity to buy great company stocks on the cheap. Sometimes, during a market crash, you can literally buy a company at a 50% discount. Hold on to the company and wait for the crash to be over and the company's price doubles. Assuming it takes 3 years for that to happen, that would mean a 26.67% return for you. And let me tell you, that's a pretty sweet return. So the next time, while everyone is panicking and dumping their stocks into the market, you'll know better. Stand aside and watch like a predator. Be like the cheetah stalking its prey. Once the company is under 30 or 40% of its market price, start incrementally buying into the stock and go for the kill. The fourth common excuse people have is that they say they don't have time. Well, investing is the one career choice where you don't have to work hard. All you have to do is work smart and make the right investing decisions time and time again. Your money and your wealth will start growing automatically. This is one of the fallacies of investing. If you're doing it right, it doesn't require that much time. Once you have your watch list set up, we're talking 15 minutes a week max to manage your portfolio. Anyone can find 15 minutes a week to secure their financial future. I really don't care how busy you are. I'm sure you can spare 15 minutes for something that will help you reach your goals. The final excuse I hear is people saying, "I'm not good with numbers." Well, you don't have to use missile science to invest. Investing is actually quite simple once you get the hang of it. These days, you have online financial calculators to help you calculate how much you need to invest at a certain compounded interest rate to reach your money goals and have a great retirement. You also live in the digital and information age, which means you don't have to wait 3 or 4 days to get your company news. Everything is available, including breaking news at the click of a mouse. But if you still feel uneasy while investing, then subscribe to some analyst reports that keep you updated on the future prospects of your company. You can read economic surveys and reports online that will tell you how the economy is currently faring. You can also follow some investors on their social media and get insider scoops on what they're investing in. Mutual fund reports are also available online and you can explore the common stocks the biggest mutual funds are investing in. All you have to do is emulate their strategies, at the minimum. If you think you can do better, you can always go for that active portfolio strategy. Again, what does this show us? Investing is simple. All you have to do is shake off your fears and excuses and get started. Franklin D. Roosevelt once said, "The only thing we have to fear is fear itself." Nothing is stopping you from investing and seizing today's opportunities. Overthinking and fear are your worst enemies. They will paralyze you into inaction so much so that it will cause you a lot of anxiety and depression. Investing is one of the few opportunities you'll have in life to grow your wealth and achieve financial freedom. All you have to do is follow a sound strategy. Start researching companies and the industries they operate in. Know your circle of competence, as Warren Buffett says. Research companies whose business models you know well or have experience with. If you pick an entirely different industry, your chances of success can quickly diminish. Make a final list of the companies that seem solid and financially stable to you. Wait for the buying opportunities you'll get to invest in those companies. When those really good companies go on sale, that's when you become the predator and start scooping up their stocks from the market. Be extremely patient when investing. Yes, you will face moments where, despite buying the stocks at what seemed their lowest point, they could still go down further. Price volatility is a common feature of the stock market. Savvy investors know not to worry about such market fluctuations. They usually have a cash pile set aside for this very purpose, as they will invest every time the market dips. Keep your eyes on the long term. Warren Buffett says even if the stock market shut down for 5 years, he wouldn't need to panic because he's a long-term investor. So in conclusion, these are the time-tested ways to succeed in the market. They've been effective from the times of Benjamin Graham until today. If you want to learn more about investing, check out some of our other videos. Thank you so much for watching. If you enjoyed this video, give it a thumbs up, share it and subscribe by turning on notifications by clicking the bell icon so you don't miss any of our future videos. With that said, see you in the next one.